Welcome to Crypto Academy Live. I'm Ash Bennington. Education is a major part of Real Vision's ethos. This is why last year we launched the Academy, a groundbreaking course that explores the world of macro trading and investing. It's about time we added crypto to it. So two experienced traders with TradFi backgrounds, Ovie Faruq, aka OSF, and Michael Anderson, aka Mando, worked with us on a beginner's course that's laid the foundation of our new Crypto Academy. 5 episodes covering macro, crypto majors, altcoins, meme coins, and NFTs. You can still sign up for lifetime access for just $350. Just go to realvision.com/Crypto Academy. That's realvision.com/Crypto Academy. Our members left some additional questions, so we asked OSF and Mando to come back and answer them. Mando couldn't join us today, unfortunately, but I'm pleased to say we have Ovie Faruq, better known as OSF, co-founder of rektguy, is with us. Ovie, welcome to the show.
Hey, Ash, thanks a lot for having me. It's always a pleasure to be back.
Well, thanks for joining us, and on this show, especially with such an overwhelming positive response from our viewers. Ovie, let's jump right into the question. I should say, in full disclosure, you've seen the questions ahead of time to prepare thoughtful responses. The first question comes from Leela. Leela asks, still can't decide whether I should be staking or not. Thoughts about the pros and cons of staking, OSF?
Yeah, that's a very good question. I think the first thing you need to think about is which provider or where you're staking something with. So, for example, exchanges offer staking services. You had other third-party staking services. And when you put your crypto into those services, you have to understand that you no longer technically own your crypto. You've put it into a staking protocol with a third-party service provider. So if you want to access it, now, there and then or whatever, if something goes wrong, you may not be able to, depending on what you've signed up to. So you need to make sure that the yield you're getting on the staking offsets that potential risk. Right now on stuff like ETH, Bitcoin, even stables, if you are staking ETH as a delegator, you're getting low single-digit percentage yields in terms of the staking return, which in my opinion is not really like that great. If you're thinking about crypto as an asset class that can double or triple or quadruple or make 5 times your money in terms of return, earning an extra 3%, 4%, or 5% to me isn't really a big deal. So personally, I steer away from staking. I think if you did stake, I would do it in the most official way possible, which might be being a direct delegator on ETH. It might be using, I don't know, something like staked.us or one of the larger and more well-known staking providers. But even then, you still have a risk. And if you think about stuff like Voyager and Celsius, which are two big service providers that went down during the 3AC crash in 2021, there is always going to be a huge risk on it. And I think, in my opinion, unless you're getting like large double-digit returns, it's not worth it. And if you're getting large double-digit returns, you have to ask yourself where those returns are exactly coming from. And it's not always in a way that is completely risk-free. So yeah, my opinion is it's just not worth staking. But I'm just one man in his opinion.
Yeah, and I should say, I'm looking right now at the Caesar rate on the CoinDesk website. It's 4.22% right now on ETH. But by the way, we should say, I think it's a minimum position of 32 ETH that need to be held to stake on the Ether network. Obviously, you could contrast this against the liquid staking protocols. But again, an additional layer of risk there.
Yeah, agreed.
Yeah. Okay, our next question comes from Jeff. Where can I find a good resource to set up a Web3 wallet? Well, this is a question that I get to answer. We created a phenomenal series right here at Real Vision by one of our pro crypto members, Chris Bullock and Elaine Lee, called How to Protect Your Digital Assets. You can access it as part of the Real Vision Crypto Academy. So if you're looking for a video, Jeff, you can get it right there. All right. Next question comes to us from Andre. This is a follow-up to your macro episode and the data you looked at there. What about liquidity, Ovie? And I should say, give us a little bit of a context for what you mean by liquidity and its importance in thinking about digital assets.
Yeah, look, liquidity is one of the most important things if you're looking at the world of smaller cap altcoins, if you're looking at NFTs, if you're looking at meme coins. In macro land, we often forget how ample liquidity can be in stuff like foreign exchange or equity indices or large cap equities. Liquidity is just there. You want to buy something or sell something, the average person like you or myself or any other retail trader is able to get their size without moving the market too much. But when you come into crypto, which is a tiny, tiny, tiny asset class compared to the world of traditional finance, I mean, just to put it into perspective, the total market cap of crypto right now is something like 1.5 or 1.6 trillion dollars, which is almost the market cap of Amazon, just one stock alone, right? So it shows you the huge difference in liquidity. But if you're trading something like ETH or Bitcoin or stables that are larger market cap, I mean, Bitcoin itself is over 50% of the total crypto market cap. It's pretty liquid. You can buy and sell things generally within the price level. But when you're trying to buy and sell an altcoin or an NFT, there are different things you have to think about there, I think. With NFT specifically, remember, it's an over-the-counter market. So you can't just go onto an exchange and there's always going to be a price there for you to buy or sell. You have to actually find an opposing buyer or seller to sell that specific asset because you're buying a specific thing. There isn't always an exchange on that. For smaller cap altcoins and meme coins, many of them aren't even listed on exchanges. So you have to trade, again, over the counter using decentralized exchanges. And they can often be very illiquid as well because the liquidity just isn't there. So, I mean, how do you track and monitor these things? If you're looking to invest in altcoins and lower market cap stuff, I would look at the volume that's traded on a daily basis. I would look at the market cap versus the volume, and you can divide the market cap by the volume. And the smaller the number that is, the better it is, that ratio, because you want the volume to be very high versus the market cap. And the other thing I would say is you need to make sure you look at the volume over an elongated period of time. Like just 1 day of volume or 2 days of volume or 3 days of volume is not enough to say this is a really active and liquid thing that I can trade. I think you need to see something that has proven weeks and probably months of volume for you to have confidence that the liquidity is always going to be there. So those are the things I would say you need to think about.
Yeah, and I should point out just a bit of a distinction here. Ovie, what you're talking about is the liquidity of particular digital assets, particular protocols, depth of market. In other words, your price impact when you trade against it, the average daily volume versus the market capitalization. Raoul often talks about market liquidity in the global aggregate sense of the amount of central bank market liquidity. So these are two different things you can think about: the liquidity of global markets in terms of money supply. Ovie is talking about it right now specifically in the context of individual protocols, an important distinction for folks to understand. Next question comes to us from Giuseppe. Could the scarcity of Bitcoin affect Bitcoin miners? Thoughts about Bitcoin, Bitcoin miners, and the scarcity issue?
Yeah, I mean, Bitcoin miners have done great this year. Bitcoin mining stocks are up a ton. Theoretically, the scarcity should affect them. I mean, each Bitcoin halving, when the reward you can get from mining halves, it's more work for miners to get the same amount of Bitcoin, or they're getting less amount of Bitcoin for the same work. And so you would think their earnings, their forward earnings are diminishing. And so I think theoretically that should be a bad thing for miners. In practice, I think the movement of miners tends to be just correlated with the movement of crypto. I think the larger miners that are there and that have a good market share and are getting ample rewards, at the end of the day, if the price of Bitcoin is higher, then what they're mining is higher as well. So that's the other thing you need to factor into your decision making, because yes, we can think about it in terms of like how much Bitcoin they're able to mine. But if you're thinking about the dollar value of what they're mining, that goes up a lot with the price of Bitcoin. So, in let's say 20 years time, they may only be mining a fraction of the rewards they're able to mine now. But in 20 years time, the price of Bitcoin could be materially higher than it is now. So those are the two things we need to factor in. It's not just the fact that it's deteriorating in supply, but it's also the fact that its value and therefore the dollar value of the rewards could also go higher alongside that.
Yeah, it's interesting. I actually had dinner with an investor last night who was talking about the miners. How do you think about the miners big picture? Do you just think of them as a leveraged bet on Bitcoin? I mean, clearly the price is correlated.
Yeah, in my opinion, though, I think they're a leveraged bet on Bitcoin. I think it's very clear that they move, a multiple of 2 or 3 or maybe even larger than that times the price of Bitcoin. I don't think you can fully say it's a leveraged bet on Bitcoin, because Bitcoin itself is this great decentralized entity. With miners, remember, it's literally a company. Humans are there running it, and you are also hoping and trusting that the people there running it are doing a good job with corporate governance and running a company and managing their balance sheet and all that kind of stuff as well. So yes, like because there are additional levels of risk that you have to consider with what are centralized entities versus just Bitcoin. They could be a little better than Bitcoin because they're riskier, but you have a lot more to consider there, I think, when you're investing in miners.
Here's a question so big that it comes from two different users, from Robert and Nivtej. I hope I'm pronouncing that correctly. Other than supply, and I would add market capitalization, how do you value crypto? And this is the killer part here. How do you value use case, technology, and corporate adoption? Big question from Robert and Nivtej.
Yeah, look, I think those three things are very intangible. I think there are some metrics you can use to maybe value how effective its use case can be. You can look at something like the total value lot within a blockchain. So if you look at something like Solana or ETH or I don't know, like Avalanche, etc., you can assess how that TVL has changed over time. You can look at the number of active wallets and how that's changing over time. You can look at the number of protocols and transactions and the usage of those protocols and see how they change over time as well. So there are things you can look at which tell you they don't necessarily. I mean, maybe they don't tell you like, is this thing going to be a game changer? But it does tell you, are people actually using the use cases that these blockchains are saying they are solving for? And it's a tough one because I just don't think it's the be all end all, because you could look at those metrics and in a bear market and suddenly all those metrics go down, and then you might say, oh, crypto is dead. No one wants to use this. This has no use case. And many people were saying that a year and a half ago. And look, lo and behold, prices are higher. And now the usage of these chains in terms of TVL, in terms of number of users, in terms of protocols and people building it, suddenly is a lot higher. Right. And it begs the question, is that because are people using it more because the price is higher, or is the price higher because people are using it more? And in my opinion, I truly believe price moves first and then the narrative comes after. And so I personally don't get hell-bent on how do I value the fact that Solana has a faster hash rate than Ethereum, or how do I value the fact that Solana feels more centralized than Ethereum? Like, these are very intangible things that or narratives that maybe come to market to explain price action. But I often think price action happens first, and people say, "Oh, it's because of this or because of this."
Yeah, that certainly seems to be the case. I mean, at the highest level, it's fascinating to me, having been doing this since 2017 or so, following the markets relatively closely. I've seen it in probably 3 or 4 cycles at this point, and it seems like every crypto winter, this is where the skeptics say, no, now crypto is finally dead. And then you get this massive bull market, and people who are passionate about it say, now, here it is. It's the moment we get mass adoption, right? And neither of those extremes has ever actually sort of played itself out. But that's the narrative. And to your point, with the narrative chases price, it's such an interesting one. Boy, here's a great question from Derek. Deficit spending has arguably nerfed the Fed's hawkish policy. Jay Powell obviously out yesterday with some very dovish remarks for 2024. It is likely why we still have strong equity performance and strong payrolls, as well as markedly higher GDP growth, says Derek. The fiscal tap should be the fourth horseman in Ovie's framework, in my humble opinion. Any thoughts about the fiscal tap? By the way, this is what we were talking about earlier in terms of global central bank liquidity.
Yeah, look, it is tough to disagree with that. I would say my one counterpoint, or two counterpoints maybe, is there's obviously been a massive tech boom with regard to AI in the last year or two or so, and that could be a strong argument for employment, for economic efficiencies, for productivity. And if you look at basic economic theory, the one thing that shifts out your productivity curve is big advancements in technology, and I think that's what we're seeing right now. The second thing is, if you had aggressive deficit spending, it maybe wouldn't help the inflation narrative so much. And there's a question of like, well, can you raise interest rates high enough to offset that and bring down inflation? But I think what the Fed has done with the monetary policy has clearly worked, or at least the numbers say they worked. We don't know. We maybe have to take numbers with a pinch of salt at this time of year, but the numbers have said they've worked. And I think like we've had moments where payrolls have been very high, but ultimately the trend is lower. Payrolls have come lower. If you look at economic growth, we had that monster GDP print for the US the other quarter as well, so maybe that has fed into it. But yeah, like rising debt in the US is a concern. It has been a concern. to be honest with you, it's been a concern since I started in this industry and set foot in the trading floor. People talking about US government debt spiraling out of control, and they seem to muddle their way through it and extend and pretend. This is a very like crass view on the world and the way things are, but in my opinion, that's the kind of thing that just gets extended and pretended and pushed out until the end of time. And if you just look at the way so many different companies manage their balance sheets and manage their debt loads and their liquidity and how they operate, it's like, we keep going, and then as soon as we can tap the markets for liquidity, whether it's an equity raise or whether it's a debt sale, we do it and we extend out our curve much longer. And there's no reason why the US can't keep doing the same thing. And yes, like the government debt is large, but like the ratio of debt to GDP and all that kind of stuff is, those metrics are fine compared to many other countries out there who are suffering from whatever it is, hyperinflation, other crazy economic problems. So it's not something that concerns me personally, because I think it's an issue that can be kept under wraps. But
I guess to Derek's point, the question is it harder to keep that under wraps when you've got the federal funds rate at 525 to 550 versus when it's closer to the zero bound?
Yeah, it is. It definitely is. I think we are not going to see the true impact of it, and until the next 12, 18, 24 months. I think we've just seen the impact of high interest rates. We've seen maybe like a natural progression of inflation, but we haven't seen the true impact of what that could have in, let's say, 12 months. Less than 12 months time, when rates start to come lower again. It's a tough one. Like, that's the one thing where it's like we've had all this positive and dovish news, and everyone's like, oh, great, like rally on, and it's just like glaring thing in kind of like in the background, which only comes to fruition, I think, when there's no big news out there, where it's like, well, what about this? But I don't know. We won't know the answer for another 12 months, I think.
It's also interesting to talk about this against the sort of the broader context of the macro backdrop. Essentially my whole life, we've been in this period of declining 10-year treasury yields, for I think peaking in late 1981 at about 16% and riding down. I mean, that curve from the upper left to the lower right has been, for all of our viewers in their 40s, it's basically been their entire natural life, not just their lifetime in the market, but their entire biological life. And is seeing that trend potentially reversing here is obviously something that could cause concerns from a deficit spending perspective, from the perspective of the aggregate amount of debt out there. So it's just a fascinating topic, and a really interesting insights from you there, Ovie. Next question comes to us, another one from Leela, who says, I don't know if I understand the economy, in double quotes, of ETH correctly. It isn't a capped coin, right? I think she's talking about the hard market cap, the hard cap in Bitcoin of 21 million. Should I rather be looking at it to take profits and convert to Bitcoin, for instance, she says? Should I stop thinking of it as a hold for a long term like I do BTC? Boy, that's a loaded question for you, Ovie. What do you think? Jump in.
Well, look, I think that question assumes the only factor you're considering with regard to holding ETH or Bitcoin is the supply. And that's one thing I think you should consider, but it's not the only thing I think you should consider. The economics of ETH are a bit more complicated than they are of Bitcoin. It's neither inflationary or deflationary or has a fixed supply. The supply of it changes based on a number of different factors. One of them, I think the easiest way to describe it is maybe like how busy the network is, if you like. And that was a change that got implemented after they did the merge last year. Was it last year or this year? I think it was last year, right? Something that I think is good to look at is a website called ultrasound.money, which shows you whether ETH is at the moment in a deflationary mode or in an inflationary mode. It also shows you how much the supply of ETH would have changed had they not switched to proof of stake from proof of work. So the mechanics of ETH is it's not static like it is for Bitcoin, where you just have fixed supply of 21 million, the amount that gets rewarded, every 4 years halves, and theoretically it becomes more scarce, or the rate of Bitcoin released into the market decreases substantially over a period of time. ETH isn't quite like that, and the mechanics and the dynamics are much more complicated. But I think you need to factor in other things than just the supply into your decision making. And it doesn't mean, I understand what you mean. It's like, well, maybe Bitcoin is a better long-term hold because I just know the supply is going to be fixed and the demand for it maybe increases over time and the amount released decreases. But then the other thing you have to consider is like, that's just the supply side of your argument. What about the demand side? Like, is there a reason why people want to have a greater use for ETH than Bitcoin? And I'm very much an ETH maxi, so I'm not going to be evangelical here. But there are many other use cases for Ethereum that don't exist on Bitcoin, and maybe you're starting to see some of those use cases come to Bitcoin. So you have Bitcoin ordinals, which are very similar to NFTs, but at the end of the day, the decentralized application use of ETH is far greater than Bitcoin, and there's an argument to say that will create a much larger demand for it than Bitcoin. And I'm not saying that's what will happen. And Bitcoin has its strengths that Ethereum definitely lacks, but you need to consider both sides of your argument, not just the supply side, but also the demand side as well.
Yeah, I would only add to that, Leela, don't feel bad. All of us are figuring this out right now. I mean, sort of this almost 13 ways of looking at ETH here. You could think about it as a currency in terms of the fixed supply. This was the point that you made, Leela, relative to Bitcoin's hard supply cap of 21 million coins. You could look at it as a fixed income instrument on the staking side to try and calculate a yield basis. You could also look at it almost like an equity from a cash flow perspective based on the fees that are generated by gas. So, I mean, this is pretty complicated stuff. I think we're all new to this in terms of trying to build a model to understand how it works. Obviously, extremely early in this game. Lots of smart people struggling to figure it out. 80 hours a week on this one. Okay, next question. I think this question might be for your partner, but I'm going to throw it out to you. Tell me if you have any views on this. This is for Mike or for Mando. How do you filter the ocean of altcoin small caps in an effective and efficient way to identify quality projects that will become mid caps? How do you find the valuable ones? Give it to us step by step, please. So he wants detail. In addition to answering this question, how do you figure out which small caps are going to become big caps? That's the general question.
I will give you my completely honest opinion on that. You can spend time creating a spreadsheet of all the small caps out there, putting down all these different metrics, liquidity metrics, market cap, use cases, blah, 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 blah. And you will find hundreds, maybe even thousands of them. And then you will think, how do I pick which one? And you can look at your metrics and numbers to pick the right one. But at the end of the day, it will not give you an answer which is going to be effective. And I think you have to understand the way that crypto works. And it very much revolves around people coming together and agreeing on a consensus opinion and then putting their liquidity and capital behind a certain narrative or a certain token. And that's why this idea of community is so important within crypto, because even like within tokens, there is a Bitcoin community, there's an Ethereum community, there are communities that live around new and upcoming coins. And it's often a case of like, which community is the strongest and can make themselves the loudest and can pitch a story, a narrative that people believe in and can prove that they're able to deliver on those things. That's when suddenly everyone jumps into a bandwagon, and that's when a small cap can move from being a small cap to a mid cap. Another factor in that is often if it's a new chain that maybe has raised VC funding, who are the people who are backing it? Is it well-known backers such as Paradigm? Is it VCs you've never heard of? That's a big factor in it as well. And in terms of how you yourself can judge and pick the right ones, my strongest advice is to find a community or a group of people where you can just discuss different coins, and that will help you get a bellwether and a barometer on which coins are the hot coins that people are talking about, which ones are the ones that people aren't talking about. And I think people often have this obsession with like, how do I buy Solana, early before it quadruples or quintuples? I guess I would say listen to Raul and realvision, because he's been telling you that for a few months. But how do I find this brand new altcoin before it gets to where it does? And it is very, very hard to do that as a retail investor, because you would have had to. The people that are involved in that kind of stuff are like, VCs who are early investors and who already have the whole picture. Devs who are actively working on these projects. Other founders who know other founders of these projects who get the inside scoop. But just as an outside retail investor, you're just never going to have that much information. That's just the unfortunate world we live in. But it doesn't mean that you can't make money on these things, because remember, in crypto, a mid cap can move to a larger mid cap, and that could be a 5 times your money or 10 times your money or 20 times your money trade. So I think it's important to not get hell bent on like, how do I hand and cherry pick like the perfect small cap coins that will move into mid caps, but focus on, okay, I've now whittled this down to 5 or 10 coins that have a strong narrative that lots of people are talking about. Maybe I can compare those market caps to similar market caps, coins with similar coins with larger market caps that trade in a larger bracket, and then calculate my return that way. And then, I own things with a strong narrative. I think that's a much better way to approach it than getting hell bent on like, how do I figure out and decipher like which specific altcoin is going to be the one that's going to, do 100x this year.
Yeah. Here's another one from Mike. Boy, Mike is a tough professor. This is another tough question. How do you time entry and exit points for altcoin trades? Again, give us step-by-step bullet points. Make it easiest for us to follow the process. So Mike wants to know, how do you find the small caps and be big caps? And then how do you time the market? Two
I think, so yeah, nice and easy. If I knew the perfect answer to that, I would be doing a lot better than I am. But here's how I look at it. I think with regard to timing your entry and exit points, I think with regard to entry, I think when you form a strong opinion on something and you're like, okay, cool, I want to buy this coin. I have done my research on it. I've spoken to at least 5, probably even 10 different people on it who all agree and have the same thesis, and you're ready to deploy capital. How do I go about timing the entry? I think you're probably supposed to spend maybe, let's say, 50% of the amount you're willing to spend on this coin, day 1, day 0 upfront. I think this is the market to do it in, because things tend to go higher. And then I think you're supposed to dollar cost average every time it goes lower. So let's say it drops 10% lower, you put in some more capital, drops 20% lower, you put in some more capital, etc. And that way, crypto's so volatile, and especially if you're playing in small caps, they're going to move around a lot. That way, you kind of like prevent yourself from crazy price action and buying things at the highs and selling at the lows. You'll just average into a price. Another method is to say, okay, I'm going to average into this thing over the course of 30 days, and I'll divide my total capital by 30 and put in that amount over the course of 30 days, and then you'll just get some weighted average cost over a month. I think those are the best ways to enter a trade, rather than putting your entire capital into it in one go and just try to guess in time when you're going to do it. With regard to exit, I think you need to do some analysis on what your target price is. And let's say you're buying a small cap and you think, oh, this is a gaming token, and it could be as good as something like Gala Games or, I don't know, Big Time. And this is where the market cap of Big Time is. This is where the market cap of my thing is. And you think, okay, it could get to that market cap, but realistically, you probably want to aim somewhere in between, whether it's like 70% of the way or 75% of the way. Once you have that target price, that should be your end goal, where you sell your last bit of that coin. And I think you probably want to maybe aim for something like 50% of the way to there to start averaging out of your sale as well. So just like how you got into the coin, you don't have to sell everything in one clean sweep and try and catch the top. I think you should be selling chunks of it as it goes higher, as it goes higher, as it goes higher, until you get to your final target price, and then you sell the whole thing. And I think writing these prices down and how much you're selling each time is very, very important, because you need to stick to them. You need to not change them, right? You need to, the biggest mistake you can make is, oh, I bought this coin, now I'm up like 100%, and I think it's going to keep going higher. So instead of selling my 10% here, like I wrote down, I'm now going to like buy another 10% because I just think it's going to keep going higher. And the next thing you know, the next day, suddenly it's 50% lower, and you've actually lost money from when you should have made money because you bought something at a higher price. You need to write these levels down and targets down and keep it mechanical, so it strips out any emotion that you will feel when prices go very high and prices go very low. Because just like when you're trying to enter the trade, suddenly the price drops a lot and you think, oh, I don't want to buy it anymore, and you start doubting yourself and everything just because the price is low, when actually you should be buying it. And if you have it written down and you just have it as a methodical process, you will stick to it. And it's very tough to lose money that way, when you have levels that you'll buy that are low and you have levels that you'll sell at when you're high. And you just have to not get hell-bent and obsessed with getting the absolute bottom and the absolute top and getting maximum P&L, because that's very hard to do.
Yeah, it's greed and fear and emotion versus reason, always in investing. Here's a question that comes to us from IKKO, exactly what you were talking about earlier, actually. You can get into a trade and then not be able to get out of the trade as there is no or low liquidity at that time. How do you deal with that issue? I think you touched on this already, but the specific question coming to you from IKKO.
Yeah, I think when you get into a trade, something might feel or seem very liquid at the time, and I think you need to chart or download the volumes or whatever, however you get the information. And I think CoinGecko and CoinMarketCap are good providers of this information. But you need to look at the liquidity over a longer period of time and not just in that moment in time. And whenever you buy something in crypto, liquidity should always, always, always be a very important factor in your decision making. Like, you might look at a coin and think, oh wow, this is this crazy gaming coin and it's only at 1 million market cap, and everything else that's a comp is at 100 million market cap, and this looks really cheap and it's great, I should buy it. But what's the point in it looking cheap if when you buy it you're unable to sell it at the same price, and if the bid ask of that is very, very wide. And so that has to be a factor in your decision making. I think often people are like they do the rel val and think, oh, this is really cheap, this is really rich, let me buy the cheap one. And well, why is it cheap? Because it's not liquid. And that's not to say it can't become more liquid as time goes on, but you have to just factor that into your risk. And when you get into a position you haven't done that analysis and you get stuck and something is illiquid, I would suggest the best way to get out of it is to trade with the liquidity that's available. So don't sell the whole thing in one go, because you'll see that you take a 20 or 30% liquidity hit. Just sell what is available on a daily basis or an hourly basis or whatever the right time frame is where you get the liquidity, and just nibble away at your position and get it lower and lower and lower over time, because that's going to get you a much better exit price than just trying to sell the whole thing in one go when it's illiquid.
Yeah. Oh, we've got a lot of questions, Ovie, coming in right now live on the website. Good Lord, we've got a lot of people watching us, sending us questions right now. So let's dive in and take some of these. It's always great to see when we have so many people participating in a live conversation. First question comes to us from John K., who says, hi, Ovie. What are the best resources to point an artist/illustrator to for her to learn about how to use crypto and NFTs with her artwork? That's a fun question.
Yeah, that's a great question. I think I would say that the best way to learn is just by minting something and just jumping right into the deep end. I think luckily now these days so when I say mint an NFT, it would mean that's a process of taking your digital image, uploading it onto the blockchain. That's not technically the correct term, but I'm just trying to explain it conceptually. Uploading it onto the blockchain and then having it there for anyone to be able to buy and sell. And these days, it's actually pretty easy to do. So if you go into OpenSea.io, if you go into Manifold.xyz, the creator tools now are very streamlined and are very user-friendly. So you can literally just go onto that page. You would have to set up an Ethereum wallet or a Web3 wallet, depending on which chain you go onto. And I think hopefully with that, there's the realvision thing you mentioned, Ash, which we can point people to learn how to set up their wallets. But once your wallet is set up, you can go into something like Manifold.xyz, and it's as simple as just uploading your image. You click upload image, press confirm. It will get the image will get uploaded. Your piece will be minted on chain, and then you can use very user-friendly tools to create auctions and set prices and list your work how and when you want to. I think one of the best places to kind of like learn from, but also get a sense of how people run their artworks in NFT format and how people kind of like manage their shop window, if you like, is to be on Twitter, on X. So feel free to follow myself on X. My handle is OSF_rekt, but you will see there's a large NFT community there, and people are often talking about different things such as like, what price should you list your work at? Should you do an auction versus a normal sale? Which tools should I use to mint my work? And these are all conversations people who are super NFT native are still talking about every day. So don't feel like it's like you're asking any stupid questions. But I think it's a great place to learn, because you can also post questions yourself and get involved in discussions, and generally the community as well, because it will get you some more eyes on your work, I would say.
Yeah, it's one of the interesting things for people who are joining us for the first time and just getting their heads around it. It's one of the interesting things about crypto. Here we are, we're talking about obviously technicals, fundamentals. We're talking about tech and we're talking about the art simultaneously. It's something that you don't see, for example, when you're following the bond market. And it's one of the things that makes crypto fun, I think, and interesting. Okay, next question comes to us from Melvin. Melvin says, "Hey, Ovie and Ash." Hey, Melvin. Bit of a crypto veteran here, but still looking for tips and tricks to take profits in the coming year. What are some signals I should be looking at?
Yeah, that is a good question because I'm also asking myself the same thing. I think something that we probably all have in our heads is, okay, when we get back to all-time highs in terms of prices, we're starting to switch on as to, like, when should we be selling? I think I still believe crypto is very much a retail-driven market. That may change with the ETF stuff, but I think you want to identify situations where there is signs of like pure greed within the market. And I think when we had the big crash in 2021, you just saw insane amounts of leverage in the system. You saw very aggressive plays by 3AC and all the other guys. I think looking at funding rates is a good way to get an idea of it. As maybe you want to look at the average funding rate over average monthly funding rate, and as that ticks up to levels, I mean, it's actually recently been at levels not seen since October, November 2021, which is kind of crazy. But I think my guess is it will probably go higher. But when you have sustained levels of high funding, it means there's a large amount of leverage in the system, and that's the sort of thing that can get wiped out and then have following repercussions afterwards as well. I think it's important to understand things from a macro perspective as well. So, like, right now, we're about to enter a period where the Fed is potentially going to cut rates. I think the expectation is they'll start cutting rates in the second half of next year. We're entering a period where we hopefully will get spot Bitcoin ETFs approved and an influx of institutional managers come in. So it feels like we're early in that stage of there's probably a lot more room to run. And maybe it's the point where, okay, we've had the Bitcoin ETF, we've had the ETH ETF, everything's on the table now, and the Fed has already cut rates to a level where they think is reasonable, and we're kind of running out of good news on the pipeline. And that will probably coincide with the top of the market. I think those are things we have to be wary of. I don't know what the future risks are. I don't know what the next thing is going to be that will cause the end of this cycle and the beginning of the next bear run. But it's going to be something that's not too dissimilar to what we've seen before, when I think people just get in over their skis in terms of leverage, in terms of risk taking, in terms of what people are buying, in terms of the market caps of maybe meme coins. If Doge gets to another $80 billion market cap, that probably tells you that people are so hungry for risk, they're chasing this random stuff with no inherent value to get their returns from. I think that's probably when okay, it's time to start being a little bit cautious. So yeah, I think that's probably a really good one. I think when you see meme coins when you finally see meme coins get to market caps that they got to last cycle or possibly even higher, that's when investors are just chasing crazy stupid things to make money on, and we're probably getting to the point where we're at the end of the risk spectrum, and it's probably time to start being cautious. I think that's probably going to be a really good one.
So when it reaches a new high from which it crashed last time?
Yeah, I think so. Yeah. Well, yeah. Since when it reaches the same price, or when it starts getting towards that same price, I think that doesn't mean sell, but I think it's like alarm bells, right? I think it's hey, let me just not get sucked into this euphoria and just start thinking, thinking out of body a bit more.
Next question comes to us from Boris. Hello from Germany. Boris says, hello. What is your opinion on NFT lending? For example, I'm the proud owner of a Mad Lads NFT, as NFT lending is quite a new topic for me. I'm thinking of making use of this NFT. Thoughts? Boy, this sort of touches on the same point that we got at the top of the show with staking.
Yeah, I think the NFT finance market has been growing at a pretty alarming rate. I think you need to just decide whether you want to borrow or whether you want to lend. I think if you want to borrow against your assets, you have to understand what you're going to use that capital with. So let's say you have your Mad Lads and you borrow 150 Sol against it. You would only do that if you have extremely high conviction that you're going to be able to return a higher amount from investing that Sol versus the interest rate you're being charged on it. There are tax benefits to doing it. So, for example, if you're in a jurisdiction with very high short-term capital gains, you could theoretically borrow against your Mad Lads, let's say like an 80% LTV, and then default on the loan, and then you're offsetting what you would have had to pay in short-term capital gains. So that's another use case of it as well, which is worth considering. And then in terms of lending, I think you only really want to lend on assets that you are willing to own. Like lending, I would say, is similar to selling puts, basically. So if you'll earn whatever 10%, 20%, 50% on something over a certain amount of time. But there is a risk someone will just be like, oh, you know what, this price of this thing is lower, I'm just going to actually default on the loan, and you're going to end up with the actual underlying asset. So it should only really be on assets that you are happy to own, and understand that you will only own it in an adverse condition for that asset.
By the way, one additional risk that does not exist when you're selling puts is the idea that there might be a security problem with the protocol that could cause you to lose the underlying asset, not for financial reasons, but for technical ones. And if this is something that you're especially attached to for emotional reasons, you love this as a piece of art, there's always that risk that there's going to be a technical flaw. We've seen this happen numerous times before, and those digital assets could get compromised. So just something else to think about. Next question comes from us from Ched. I hope I'm pronouncing that right. Thoughts on a potential gaming narrative for this cycle? Thanks.
Yeah, I mean, look, we're in a massive gaming narrative right now. I think we really are. I think there was a big gaming narrative last cycle as well, and I think it was starting to grow until things crashed. And I strongly believe in it. I think this idea of interoperability of tokens is huge. Like the fact that you can play a game, earn an in-game token, and then be able to cash it out for real money is massive. I think it's huge, and I think that's going to grow. I think the biggest challenge to Web3 gaming is there aren't or haven't really been any good games, like AAA rated games that exist with digital economy and interoperability. But I do think they'll crack that problem in the next 5 to 10 years. It will take time, but gaming is already a massive narrative in this cycle. It already is. You look at some of the movers this year and stuff like Big Time and stuff like Prime. You look at the upcoming Portal coin and how much of an attention grab that's had. Like these are all gaming coins, and this is the stuff that has already moved a 5x or a 10x and can potentially move a lot more. Because it's a very, compared to some of the other stuff, it's a very obvious use case in something that has a massive target addressable market. It's like the gaming industry is huge, and you tell a professional gamer, hey, you're really good at this game, and now instead of having like this, make-believe money in this make-believe world that you're playing a game on, suddenly it's actually real money that you can cash out. Everyone's going to want to play that game, but they just have to nail the quality of games in order to do that. And I think that will happen. I don't think that happens this cycle. I think it will happen over 2 or 3 cycles. But I think as these gaming companies start and launch, and you're able to get into this stuff, at the very birth of it, I think it's a massive opportunity, and one that's worth getting smart on.
Okay, next question comes to us from Harry. What's your left curve thesis about Pepe? I don't follow anything that has 10 to the minus 6 leading zeros. Ovie, go ahead, take a shot at this one.
Yeah, I think it's important to not underestimate the meme sector, if you like, within this world of Web3. We've seen it with tokens and coins such as Doge and SHIB. You've seen it with NFT projects. And I look at the meme sector right now as it stands, and you have Doge sitting there at like a $10 or $11 billion market cap. You have SHIB sitting there at like a $4 or $5 billion market cap. And then the next highest thing is Bonk, which is a Solana meme coin, and that's sitting there at like a $900 meme market cap. And then the next one is Pepe, which is around $600 or $700 million. So there's this huge gap between the meme coins of last cycle versus the new meme coins of this cycle. And I think that's a gap that can be closed. And I don't think SHIB and Doge are going to go lower. I think they will go higher because they're very much a part of the whole crypto ecosystem now, and there are enough people in it who want to see it higher and who will cause them to go higher. And obviously you have the Elon stuff with Doge, but that gap I think can close massively. And the thing to understand about meme coins is like how much attention can you grab, like how much is that meme used, and people find it funny. And for me with Pepe, it's an internet meme that's been around for over a decade. It's one of the most well-known ones and most actively used ones within crypto. And it's not, it is important to left curve this and not mid curve it, not mid curve it. It's not more complicated than that. It is a massively widely used meme that is sitting at a very low market cap, small number versus big number that can go a lot higher when we start to see that capital dip down the risk spectrum into the meme world. And that's it. It's not much more complicated than that.
Yeah, I should say, pointing out, because it's amusing. So the fully diluted market cap of Pepe right now, I'm looking on CoinMarketCap, about $600 million, even $606 million. The total supply, 420, I'm sure no coincidence there, 420 trillion Pepe. So again, you can do the math, 10 to the 12 times 420 and work it out yourself. That's how you get those 6 leading zeros. Okay, next question comes to us from Carlo D'Angelo. GM OSF, any thoughts on corporations investing business assets in crypto? Will the MicroStrategies approach see more adoption by companies? Really interesting question.
That's a very good question. I don't think we will see more MicroStrategies in the near term. I think crypto is still too much of a nascent industry for people to feel confident in doing that. I do think the steps we'll see with institutional adoption with BlackRock and Fidelity and all these guys stepping in with approvals will help. And I think crypto needs to be much more of a regulated industry for people to have confidence in doing that. So like the MicroStrategy strategy is very left field. It's tough to see other people having the confidence to step in and be, oh yeah, let's, let me come in and replicate this. And the only reason why it's done well because it's just like another level play on Bitcoin itself. So it's not something I see in the near term. It's not something that I think is like particularly attractive for businesses to do, even in the medium term. But you never know. You need more clarity under the existing regulatory framework for that to be considered a more active business practice, I think.
Yeah. Finally, there's a great question here to close this out on. This one comes to us from Harry again. Boy, this is just such a great big picture question to ask. The question is this: what would you have done better in retrospect when it comes to crypto trading? So nice big picture perspective. What would you have done better if you could do it all again?
Yeah, I think the biggest mistake that I made when I first got into crypto and in the first cycles is I think I would say 2 things. The first thing is, and they're related. The first thing is I think I held very good assets, and I think I was just too quick to jump at selling them for small profits. I think you have to understand that. Again, just to put it into context, total crypto market cap 1.6 trillion. Total market of Amazon around 1.6 trillion. So crypto as an asset class can grow exponentially from where we are now. And I think selling too early, or even like selling the entirety of what you own, only to miss out on exponential gains, I think is one of the big mistakes I made. And if I went back to do it differently, it wouldn't necessarily be just hold the whole thing and never sell, because you have to take profits along the way. But it would be, okay, maybe let me sell 20% or 30% or even 50%. Or even 80%, but still hold 20%, because you can still make a lot of money on that last amount that you hold because of the way that crypto moves. And the second thing I would say, which I think is very relevant to now, and is a big mistake I made in the 2021 bull market, is it's very easy to, let's say you own 5 coins or 10 coins and you have them in your portfolio. It's very easy to come in the next day and think, oh man, like this thing is now up 100% or 200%, 300%, and my stuff is only up 20% or 30%. I want to own the thing that's outperforming and doing the best in the market. It's very easy to get obsessed with owning the best performing asset within crypto because it just dominates your timeline so much and people talk about it and you get this massive feeling of FOMO. But I think the biggest mistake you can make is move away from your core positions that you've researched, that you understand, that you believe in, that you want to hold, and buy some shiny new thing because it's up 100% or 200%. Because the next day that thing suddenly is down 50%, and then the thing that you held in the first place is up 100%, and you've actually somehow lost money in a rising bull market because you're chopping yourself up by overtrading. So I think it's really important to be like, okay, I have like 5 to 10 things that I really, really like and believe in, and that composes like 80% of my portfolio, and then you can have 20% for active trading, etc. But You don't want to be like actively trading with your whole stack, moving from coin to coin to coin, because at the end of the day, you will only be chasing momentum and forcing yourself to buy high and sell low. And then you will actually end up losing money in a bull market, which would be an absolute shame and tragedy when it's the moment in time when we should be making a lot of money.
Well, it's really interesting that your first reaction to that question, the broadest possible question, what would you do differently, would be bullish in the longer term direction, right? This idea that you wish you could have held some of those assets that maybe you traded out of for tactical reasons. You went to zero. You thought, boy, if only I could have kept 10% or 20% in the gain as you took profits going up or in the opposite direction. What a fantastic conversation, Ovie. Final thoughts, key takeaways that you'd like to leave our viewers with. I know we touched on a lot of questions here. Obviously, folks should go and sign up for the course if they're interested in learning more. But final thoughts, key questions, key takeaways that you'd like to leave our viewers with.
Yeah, look, I think we have a massive, massive opportunity set right now. I know you look at crypto prices, and I know we've moved up a lot already this year. And you may feel like, oh, I've already missed the train or missed the bandwagon. When I entered in 2021, I felt the same way. But I did my work in the space and I entered, and it definitely changed a large part of my life. So I think we're at a point in this cycle where we're still very early with regard to the cycle, and I think it's going to be a very, very interesting year next year. So I would really, really recommend, strongly advise people to go away from this call, do their work on various coins and things you want to invest in, find your community that suits you, but just put in the work. Spend your spare time, evenings, weekends, researching this stuff, because I do think next year will be a massive, massive opportunity for people to make a lot of money, to put it bluntly. And you only really get these opportunities every few years, and we're staring one right in the eyes right now. So please, if anything, go away and do your reading, listen to more things like this, listen to podcasts, check out all the stuff that Real Vision has to offer. But I think we have a massive opportunity, and it would be a shame to let it go.
Hey, Ovie, thank you so much for your insights. Thanks for joining us here today.
Thank you for having me.
That's it for today, but Crypto Academy Live continues tomorrow. Make sure to tune in at 10 a.m. Eastern Time for a session on altcoin trading. And remember, you can sign up for Crypto Academy if you're interested at realvision.com/Crypto Academy. That's realvision.com/Crypto Academy. Thanks for watching. Thanks for listening. Have a great day, everybody.